In the grand arena of geopolitical theater, what better way to kickstart another cycle of chaos than with energy politics and a volley of tariffs? Donald Trump's recent comments about leveraging American oil and gas to pressure the European Union, EU, shouldn't come as a surprise to anyone who's been paying attention to the combustible cauldron that is international trade. So here we are again, with gasoline getting thrown, quite literally, onto the global economic fire. Now, let's break down Trump's favorite genre of political soundbite mechanics and weigh the pile of economic issues hiding behind those red-hot words. He has, once again, pulled out the well-worn "let the tariffs rain" card, squeezing Europe to buy more U.S. energy if they dare hope to avoid those juicy, revenue-raising tariffs. Is it bluster, bravado, or just a perfect encapsulation of transactional, numbers-on-a-page leadership? All of the above. But here's where things get interesting, not just from a 30,000-foot view, but in the way it ties into the wider, interconnected web of economic mismanagement. Trump's call for the European Union to purchase more American oil and gas sounds straightforward enough, right? After all, the U.S. has positioned itself as the world's largest producer of crude oil, thanks to a combination of aggressive shale drilling and a loose regulatory framework that champions production above all else. Big numbers in exports, big shiny economic stats, and the relentless narrative that fossil fuels somehow remain America's last strong pillar of industrial might. But here's the kicker: Europe is already scrambling to find energy alternatives in the post-Russia energy crisis. You see, following the Goliathan power struggle stemming from Russia's invasion of Ukraine, Europe's gas and oil supply chain took a massive hit. Russian gas pipelines, once Europe's energy for drip, were severed or became unreliable, thrusting the continent into the arms of other suppliers. Trump and company think this is their golden opportunity, barging in with American natural gas as the proverbial white knight. What could go wrong with that? Well, a lot. Let's not forget that liquefied natural gas, LNG, is a tricky beast. It's a global commodity, but the U.S. doesn't really have much more capacity to increase LNG exports right now. The painful truth is that LNG production and export infrastructure are limited, and those long-term contracts, pre-signed in some boardroom years ago, mean that Europe can't just snap and divert U.S. gas faster than you can say, inflationary spiral. Once again, here's the inconvenient reality. To meet Europe's energy demand, we'd need to double, triple, maybe quadruple exports overnight. Can America do that? Absolutely not. In fact, while Trump hawks LNG as a solution like some miracle cure, European buyers are still tied up in long-term contracts with other nations like Qatar, Australia, and the U.S. itself. Practicality has kicked the U.S. in the shins, limiting how much more it can actually sell to Europe in the short to medium term without crazy infrastructure investment, and I mean years of new LNG site construction and pipelines. Moreover, many European buyers are wary of signing long-term pacts with American LNG operators. Why? A more apt question might be, why wouldn't they be cautious about locking themselves into the fossil fuel merry-go-round? Climate-conscious reforms, green energy transitions, and the politically loaded dynamics of overseas gas dependence are already high on their radar. Europe, remember, wants to wean itself off unreliable fossil fuel imports. Russia's geopolitical playbook has taught Europe a harsh lesson that overdependence simply equals vulnerability. Trump's suggestion, hey, buy all our gas, or tariffs are coming, feels dangerously close to what Europe is trying to avoid. Another dependence, just a different flag slapped on the ships. Moreover, the costs of building new facilities for LNG export to Europe might not pay off in the long term. Over the next decade or so, most advanced economies, yes, the EU included, are expected to dramatically shift to renewable energy, implementing carbon neutrality pledges, and possibly relying more on hydrogen-based technologies. By then, building additional LNG capacity might far exceed future EU demand, a risk that many investors are already weighing. It's worth remembering that Trump's inflated enthusiasm about the US's potential to sell its way into European energy glory overlooks some critical international energy trends. Namely, he forgets that Europe isn't exactly short on options when it comes to gas suppliers. Since cutting back on Russian gas, Europe has rapidly diversified, nearly doubling its LNG imports from three top suppliers, Qatar, Norway, and the US, alongside African nations like Algeria. These countries now fill the void left by Russia. Sure, the numbers might flatter the US oil and gas export totals, but the elephant in the room is Europe needing energy security, not energy extortion. Of course, Trump's infamous love affair with tariffs looms large. Now, to most of us, his prescription for bringing back economic hegemony via tariffs always felt like a sledgehammer solution, brutally simple but often counterproductive. Tariffs, historically speaking, create backlashes, and typically, we all end up paying for them in terms of higher consumer prices, reduced global trade volumes, and retaliatory measures from trade partners. The real question is, if Trump slaps yet another round of tariffs on the EU, who will truly end up footing the bill? Europe would likely look elsewhere for gasoline, further souring relations at a critical juncture of global instability, political fractures, and decoupling efforts from China and Russia. Plus, tariffs tend to rebound like a rubber ball. When the US imposes them, the EU will retaliate by slapping their own tariffs back, almost assuredly damaging US export industries, from agriculture to manufacturing, and exacerbating trade tension, not to mention hopping on the inflation train to higher consumer costs. Beyond the global showdown with the EU, Trump's fixation with pressuring foreign governments to buy American feeds directly into some of the core economic issues his administration refuses to acknowledge domestically. First off, let's talk about jobs. The U.S. oil and gas sector employs fewer workers compared to other potential growth industries, especially knowledge-based sectors or renewable energy industries. Around 100,000 jobs were open in the clean energy space from 2021 to 2022, compatible with EU goals by the way. Gaining a foothold here could boost both U.S. employment and innovation. By continuously pumping capital into fossil fuels, Trump essentially doubles down on industries that lack long-term job growth potential while blocking the U.S. from dominating the inevitable global green transition. For instance, renewables are projected to make up 90% of new energy capacity globally by 2030, according to various studies. Meanwhile, fossil fuel advisors pumping oil barrels for short-term profit would fail to move the economy forward sustainably, and miss the once-in-a-century opportunity for a greener, more competitive economic base. While Trump dangles American crude oil and gas like a carrot in front of the European Union, deeper structural economic blind spots plunge the country into increasingly troubling territory. At this juncture, the US and the EU need to prioritize flexibility, competition, and major energy diversification plans, not fabricated energy nationalism narratives. To make global economic tensions even worse, the West is still reeling from a series of prolonged, unaddressed shocks, widespread inflationary forces, climate change havoc, recovery from the pandemic, and the ongoing Russia-Ukraine conflict. This adds layers of volatility to an already shaky global economy. Trump's blunt force tactics approach won't offer the solutions the EU needs, nor will his tariff proposal benefit the fringe elements of the US economy. Instead of focusing on competitive product advantages, innovation, and the embrace of renewable advances, Trump's oil-first policy doubles down on the same economic flaws that created turmoil in prior years. The idea that tariffs will somehow force European countries to bend to Trump's will ignores the resilience of the international community that loves multilateral agreements over transactional one-off deals. His comments reveal a disregard for international political landscape, favoring brute force diplomacy that won't solve the root causes of global energy crises or even benefit America's long-term interests in green tech sectors. Fundamentally, it underscores Trump's commitment to making the U.S. energy dominant, without critically considering labor markets, future energy trends, and Europe's steadfast commitment to reducing fossil fuel reliance. So what's the takeaway from Trump's latest energy proposal? 1. The U.S. doesn't have the quick capacity to flood Europe with sufficient LNG. Not by a long shot. Years-long development constraints essentially stop the U.S. from replacing Russia's vacated pipeline-sized energy gap. 2. Tariff threats will backfire. Rather than forcing the hand of EU countries, they risk severing or destabilizing already strained relationships, leading to economic retaliations that could drive up costs for Americans and Europeans alike. 3. The global economic transition toward renewable energy sources is inescapable. Europe knows this, hence they're already signing contracts with multiple energy suppliers while fostering green tech growth. The US should focus on innovation rather than outdated fossil fuel dependency. 4. Long-term energy collaboration is more beneficial than energy extortion based on short-sighted policies, and Trump's hot rhetoric risks alienating critical international partners at a time when collaboration is needed more than ever. Bottom line. Trump's energy posturing may sound fiery, but under the hood, the engine is sputtering. America's future competitiveness depends on leading a clean energy revolution, not clinging to volatile fossil fuels, and Europe isn't inclined to risk becoming dependent again. The US could lose not just relevance in the energy market, but its ability to shape future global energy policies altogether, as its trading partners pivot toward greener pastures.